While Tesla's earnings continue to beat forecasts, the electric car company is particularly bullish on its prospects in China, where deliveries of its new Model S just started. i24 News journalist Daniel Roth has the details.
Amidst a recent 12% stock dip and ongoing delays in rolling out inexpensive versions of their electric car, Tesla Motors delivered its first Model S cars to Chinese customers. Tesla co-founder Elon Musk has suggested that his company may invest hundreds of millions of dollars in infrastructure on the Chinese front.
As far as our sales in China, it's difficult to make precise predictions. What we see right now is pretty strong demand. I think probably more demand than we can fulfill this year. In dollar terms, over time, we will probably end up investing hundreds of millions of dollars in charging infrastructure in China.
The price tag for the Model S in China is $118,000, 50% higher than in the United States, though Beijing is providing subsidies to help put 5 million cleaner vehicles on Chinese roads by 2020 in order to alleviate air pollution in the highly contaminated environments of China's urban centers.
Especially with the state of Beijing's air at the moment, I have always paid attention to the idea of buying an electric car. But for years, I've always hesitated because I've seen electric cars as having small bodies, poor distribution, and being unreliable.
Tesla is not the sole electric car maker in the Chinese market, though. Chinese maker BYD's E6 is backed by Warren Buffett, and though sales have been slow because of the lack of infrastructure for recharging, there is optimism.
Well, I think the e-car market is definitely open up right now with incentives being offered by central government as well as the provincial government.
Tesla reported a first quarter loss of nearly $50 million, and actual delivery numbers were below expectations. Though high production costs may be driven down by up to 30% when a $5 billion battery gigafactory is completed, which could employ 6,500 workers, this is still in preliminary stages. Still, despite all of this, the prospect of cleaner automobile technology is causing a stir worldwide.
We're joined now by Josh Martin, analyst at i24's Daily Market Forecast. Josh, so we're talking about Tesla here. I mean, they went essentially from being a vaporware car, if you want, that people thought was never necessarily going to be, to being a toy for the rich and famous, you know, to now essentially being something that's actually being produced. I mean, are they going too fast? Are they producing too much too fast? What would you say about that?
No, I would not say that they're going too fast so far. The Model S was the top Motor Trend car in 2013. The car performed very well, receiving 5-star ratings in terms of safety. The Gigafactory, there's a lot of news of which state the Gigafactory will be in. However, it's necessary for Tesla to prepare for the future and get ready to handle more production.
Right. Now, essentially, we saw that after earnings were released, investors expressed some concern about, you know, guidance issues, negative free cash flow. Does this company really have what it takes to, you know, realize its dreams? I mean, they have these gigafactories planned and this and that, but negative free cash flow?
Well, it is a problem. This earnings report wasn't perfect. However, these are necessary for growth, and it's what the company needs to continue and handle further production.
Without the capital expenditure, obviously, they're not necessarily going to go anywhere, right?
For instance, they think research and development expenses are going to increase by 30%. However, this is necessary. Like I said before, the Model S set a very high bar.
Right.
And the Model X, where a lot of this research and development money is going to, needs to reach that bar as well.
Right. I'm sorry to interrupt you for a second. I just wanted to show a map here concerning where selling is allowed. Can you give us a little bit of detail regarding this map?
Oh, sure. There's a couple of states that have banned Tesla direct sales model. 5 of them being New Jersey, Maryland, Virginia, Texas, and Arizona.
Okay.
Missouri was...
Actually, our viewers can see it right next to you, so you can actually point to it as well.
Oh, okay. And then Missouri, which was recently passed change in their the way they write their legislator.
Yeah.
And it was passed without any public debate. It was very kind of shady the way they did it.
Yeah.
It was done by lobbyists by the National Automobile Dealers Association,
Right.
which has a problem and finds Tesla to be a threat.
Okay.
The reason for this is because they say Tesla direct sales model impedes consumers' bargaining power, while Tesla
Right.
argues that the National Automobile Dealers Association has a conflict of interest.
Obviously.
Because most of their revenue is made from servicing cars, or gasoline cars, I should say, and not promoting electric vehicles.
Right.
Because
Right.
electronic vehicles only really need updates such as that you would get for your smartphone, like a software update.
So, I mean, in terms of the shares, I mean, we saw them basically going way up and then,
way down.
you know, way down. What's going on there?
Well, share value, with a stock like Tesla, it's a very popular, a lot of interest is generated with the stock. So whenever they have a news release or when they release their earnings, you can expect a lot of volatility with the stock.
Right.
Because people react, there's a lot of bears, there's a lot of bulls on either end.
Yeah.
Tesla is up, I believe, 18. I don't remember how much it is up year to date, but it's improved and it's gone down with this last earnings report.
Right. Okay. Well, thank you very much, Josh Martin, for
you.
joining us and giving us some more
having me.
insight on Tesla.